traders and friends, market participants and enthusiasts right around the world. You are joining James on behalf of Pivot Point Trading as I sit down and bring you this Thursday afternoon market recap. Now, we do have about 1 hour left in today's trading session. However, if you have been following the markets have pulled back, albeit relatively briefly. Now, they took a relatively weak start, I guess you could say, to start Thursday's trading session. The markets have been, I guess, relatively bid throughout the day. We are starting to push back on up off from those sort of intraday session lows, which were looking a little bit troublesome. But again, this is correlating very, very nicely with the ADX shifting down. Now, the ADX is shifted down with the S&P 500 and also that of the NASDAQ. The Dow Jones Industrial Average has, at this particular point, sort of shrugged this market activity off. If you pay attention to the top right-hand corner of my screen, you can see as at this particular snapshot, we are down 24.33 points, relatively sort of immaterial move. And again, the mindset you need to be under at this particular point is that, you know, this little pullback that we're seeing during Thursday's session, it's not, I say it wouldn't be the end of the pullback or the sideways consolidation. It really is just the beginning. And I guess the narrative of this particular video, as I have been sort of outspoken about over the past maybe 1 week, if not 2 weeks, is that the market itself is getting overheated. We've capitalized tremendously well on those long exposure trades, whether it's on the diamonds or the Qs or the SPYs, and also on a lot of individual trades. But again, this is the first shift, the first pretty much telling shift that we've seen, which is ushering in the beginning of the sideways move. And this sideways move, it's not something that's going to sort of finish come tomorrow or come the end of this trading week, say by Friday. It's something that's probably going to stay along for maybe 1 to 2 weeks, if not 3, maybe a little bit longer. Perhaps it stays around for 1 to 2 months. We'll obviously work with the technical picture as it continues to sort of unravel itself, or at least reveal itself to us. But again, if you find yourself as at Thursday still chasing or looking for bullish trades, I would strongly encourage you not to do so. Now, I still have slight upper targets, so to speak, on these markets, but what I want to show you before I talk about these targets is just the state of the markets. Now, the ADX, again, on the Dow Jones Industrial Average is sitting at 72.21. This is an extremely high, elevated ADX reading, which is suggesting that we are very close to the potential top of this intermediate shift to the upside. This is not a terminal reversal, but we get to the point during these shifts in the trend or during the momentum to the upside where it simply just needs a little bit of time to sort of settle itself, to digest a lot of the gains which have been made over the past 2 months before, of course, it can continue. This is something which isn't long-term sustainable. And it looks to me at the moment, especially with the gap which has transpired between Tuesday and Wednesday, as you can see on the Dow Jones Industrial Average, and of course the composition of Thursday's candle, this is looking like a hangman type of candlestick at the moment. Obviously, we have another hour or so of trading left until we get the definitive close of Thursday's candle. But again, this is just sort of the culmination of what we assume to be some form of a blow-off sort of intermediate or even macro top on the market. Now, again, we'll move with the analysis as it continues to unravel, but it's very important that you don't find yourself at the moment chasing bullish trades. I'm going to be speaking about Apple as well, because that's something that, I first spoke about 1 week ago. And again, today and during today's trading session, finally, we're starting to see sort of, my warnings and my ushers come to fruition, so to speak, because we saw a relatively large down day. But before we get there, just pay attention to that of the S&P 500. The ADX has definitively turned down. Have a look at my screen. You can see this right here. If I zoom in on this technical piece, or I guess on this technical indicator, you can see that it has turned down. This is suggesting that we are towards the end of the trend, and this is the beginning of the sideways consolidation, if not that of some form of a pullback, which is going to be very interesting to monitor over the coming days and also weeks. We still have a bullish or relatively healthy sort of bullish candle construction. We gapped down relatively weakly, as I've already alluded to, or relatively weakly, so to speak. We do have a long lower wick, or the beginning of a long lower wick, and we are pushing back up very close to the real body candlestick of Thursday's candle. This is still a relatively weak candle, so to speak, which is currently under construction on Thursday. But what is most important is to take away from this video is that of the ADX reading. Again, this is a different market. This is that of the NASDAQ. You can see again an open window. So we're starting to set up open windows. We're essentially setting up gaps, both bullish and bearish. And again, this tends to lead towards that of exhaustion gaps. If you see markets gapping in agreement in one direction, it is generally overwhelming that those types of gaps are what we assume to be continuation gaps, all right? or, for instance, measuring gaps. I mean, these are very strong in this particular instance or under this particular setting, that of a very bullish continuational type of, narrative. But to see these gaps, or to see the gap on the NASDAQ in the opposite direction, this tends to sort of lead towards that of exhaustion. And in combination with that of the CCI turning down and also that of the ADX, which is most important, at the current sort of, I guess, climate, so to speak, or the current juncture, you need to sort of refrain from jumping into a lot of, or any, so to speak, bullish trades at this particular point. Again, I've been outspoken about this, and I believe this is only the beginning, so to speak, of what is something which is a little bit larger coming down the downpipe, so to speak. But before I continue with this, let me just show you that of Apple, because Apple is giving us a couple of interesting signals. I've been very, outspoken on the types of candlesticks that have been presenting themselves on Apple. I think it was definitively 1 week ago where I put out a market update on Apple, or an individual stock update on Apple. But you can see these, selection of candlesticks over here. We had a doji candlestick, a high wave spinning top. Then we had sort of an inside day average sort of daily long bar, another sort of spinning top, another spinning top. And it was at this point, some point, I'm not sure what exactly day it was. It would have been probably on this particular date here. You can go back on YouTube and have a look at the video. I was talking about how I would not be chasing Apple long, based on where the markets currently were, and I'd be looking for a short trade. Now, the short trade at the moment, it isn't a default solid sort of line, so it means that I'm not getting involved in it, but there's a lot of cause for concern with the actual chart pattern of Apple. What we've also established between Wednesday and Thursday is that of potentially a reversal gap. I mean, it's a little bit debatable. I guess I should say it is a little bit contentious as to whether or not it is a reversal gap or some form of an exhaustion gap. Again, they mirror each other relatively well. At the moment, this little swing high over here is lower than that of the swing high which we established towards the end of August and also into the beginning of September. So yes, it is showing up at the right location. Yes, we overshot generally my sort of area that I was looking at, but at the same time, I was very outspoken as to why you shouldn't be chasing Apple at this particular point. And as at this video, we are down $4. The intraday low on Thursday, so to speak, or at the current point was 155.02. At the moment, we're trading at 155.77. So we've regathered, I guess, 75 cents from the intraday low. But this gap here is very, very bearish. And I mean, oftentimes, gaps will fill, so it wouldn't surprise me if we saw a little bit of strength flow back into Apple, close the gap just shy of 160. If you see this, this is a trade setup forming before your eyes. Now, again, at the moment, I've got a dotted line because there just isn't sort of enough evidence, so to speak, or enough overwhelming analysis to suggest that this is something to jump into immediately. If we were to see the gap refill, then to see reversal candlesticks show up around 160, that's going to be the sweet spot. So think about that in due course. At the moment, the trade is still forming. And that's the beauty of technical analysis. We can read the charts very humbly. We can say to ourselves, look, we don't need to do anything now, but in potentially a couple of days or a couple of weeks, the trade will be ready. And again, this is just the next piece of, I guess, the technical picture coming together before we start entering into potentially a really good trade opportunity on Apple. Now, we do have earnings coming up at the beginning of November. It's scheduled for the 2nd of November. We'll see how price action moves as we get closer to earnings. But if it is relatively unchanged, and if we don't see a bullish or bearish gap, this candlestick and also chart pattern construction underway for Apple, mixed with some compelling divergent signals, also volume, and also bear flag potential opportunities, mixed with gap analysis and all sorts of things, are really indicating that we are going to see a little bit of weakness flow into the tech stocks. Now, before I guess we continue with them, I do have an upper target I just want to make you well aware of on that of the NASDAQ. So, I mean, even this candlestick on Thursday, this is what we call a hangman at resistance. Now, generally, again, with gaps, as I've already alluded to, they will fill. They don't have to, but generally they do. And I still have a target up here. My own personal target is up here at 6,648. Which is a Fibonacci expansionary level to do with confluence. And I mean, if we were to fill the gap, it would make sense that potentially we overshoot it, and potentially we may have a candlestick with an upper wick, which may satisfy not only this target here at 6648, but also potentially this secondary sort of, play on numbers, so to speak, target up here a little bit higher. So there is still the potential that this market jumps, it gasps, and it continues to rise a little bit further. But look, I would not be chasing this market based on some of the signals that we are seeing, what we've seen, and what are, under construction during Thursday's day's worth of trading. Now, if I continue the discussion Also into Amazon, I mean, you can see this engulfing candlestick which progressed or set up on Wednesday. We saw the gap down again during Thursday's trading session. We've got a little open window, so this is potentially a trade brewing. We obviously have to transition through earnings. Earnings is the 26th of October, so it is only a couple of days away, pardon me. But also before we get there, a lot of these other stocks in the top 12 list are also entering into earnings, and they are somewhat pulling back. It doesn't come as a surprise to see the pullback. Again, I spoke a lot about this, I guess, the psychology of trading and when's the right time to be placing risk on or putting risk on, so to speak, and then taking it off. And we came to the conclusion leading into the week, not only this week, but last week, that we're sort of in that harvest period where we're sort of, in many instances, taking positions that we've built over the past number of months, and we're slowly starting to roll out of them, if not completely roll out of them, during this, most recent phase of sort of market mania to the upside. So it's very important. I've also released a couple of videos talking about the importance of disconnecting your own emotions from the market at times. And again, there are still a lot of people at the moment who are only seeing green, and that's fantastic. But at the same time, it is relatively dangerous if you don't time it all that well. And the timing of the market, it really isn't all that hard. You just need to know the ebbs and flows of technical analysis and how you can apply it to, and understand when is the right time, of course, to be entering into or at least accumulating positions before the trend takes off, and then of course legging out or rolling out of those positions before the trend actually terminates. And it looks as though, just to reiterate, that the trend itself is beginning to terminate. I'm not sure what fractal it is at the moment, whether or not it's the macro sort of trend to the upside, or whether or not it's just more so a minor or I guess intermediate level. That will all reveal itself to us in due course, but I can't stress the importance of really taking positions off the table, being healthy, comfortable with those profits, and just looking and waiting for the next opportunity to begin, sincerely entering into those next crop of trades. Bidirectionally, of course, it doesn't have to be bullish. Obviously, the market tone has been relatively strong, but again, that can flip. But there are, of course, parameters, criteria, checklists that we need to go through until we start trading in the opposite direction. At this particular point, this is nothing more than that of a market slowdown. And this is simply, as at Thursday, the beginning of the market slowdown, as we've seen the ADX turn down collectively on the NASDAQ and also the S&P 500. But at this particular point, is still yet to do so on the Dow Jones Industrial Average. But again, it wouldn't surprise me if it even sort of follows through into Friday, if not at some point next week as well. So on that note, everyone, have a fantastic Thursday evening. I'll be back with you. We'll recap Friday. We'll see what happens on Friday. If not, I'll see you in pro on Saturday. Until then, everybody, it's James signing off on behalf of Pivot Point Trading. All the best. Goodbye.